Well, good morning, everyone. Good morning, everyone. Today is Monday, November 10th, 2025. It is so good to see you all this beautiful and amazing and quite chilly Monday morning here in Austin, Texas. Thank you all so very much for taking the time to join us for our Monday morning touch point. Even though I did a sound check earlier, just a few minutes ago with Melanie Price, I want to go ahead and do another sound check just to make sure that as more people enter this room, the sound actually works for everyone. So can I get someone to volunteer to unmute yourself and just start talking so we can make sure that everyone can hear you all whenever you all speak? So go ahead, Harold.
Can you hear me?
Yes, I can hear you. This is fantastic. Love it. Love it. So glad that it's working. We're going to do that every single time to make sure that I can hear you okay and to make sure that whatever you say is actually being recorded. So good stuff. I am so glad that everything is working. Let me go ahead and just let a few more people in. Hope y'all had an excellent weekend. Lots to go on. It looks like we could very well have an end to the government shutdown here shortly. Of course, that is the news that came out very late last night, but it hasn't quite passed yet. So we're just going to have to wait and see. This week would have been, or hopefully will be, a very important week for economic data. As you can see behind me, the bond market is up a little bit, only 1.5 basis points. We're at 4.108 in the 10-year Treasury. We did notice a little bit of an increase with FHA loans. We're going to review rates here later on. We're always going to start our Monday morning touch point by looking at the single best leading market indicator, and that's going to be the new listing to pending ratio, where we take everything that is new on the market, we add everything that is back on the market, and then we simply divide that by what is active, under contract, and pending. We take a look at year over year, and then we update it for the entire month so we can see what's going on here so far. I did email you a very encouraging and very positive update, which was the activity index for the entire area. And you can see that we are just slightly under 20%. But what's really good about this is that we noticed an improvement from September to October. And that is rare. Oftentimes from September to October, it actually goes down, but this time we did notice a slight improvement, and that's really good. Activity index, pending divided by active plus pending. So the fact that we did notice a very slight improvement from September to October is good. And we'll take any good news. Whenever good news happens, we will absolutely take it. So that's the good news for the day. We were starting off the day with some pretty good news. I went ahead and updated all of the previous pending, so we're going to save a little bit of time here. In all of the previous pending active under contract, it's all been updated. And we can see that 2 weeks ago, the ratio ended at 0.79. And what does that mean? That means that out of 100 properties that entered the market, the ratio of properties that went under contract was 0.79. Before we start updating this week, let's go ahead and do a little bit of a comparison. I want you to ignore this last line because we have not updated this yet. We're going to update this here shortly. But here's the good news. We had 90 more properties go active under contract 2 weeks ago compared to the same week last year. Now, we did have 76 less properties go pending, but it's a positive. So over the past 3 weeks, we actually outperformed last year on properties going under contract. Well, so then why is the ratio so much lower? Because we dramatically outperformed the incoming listings, new listings, and the back of the market. So even though we were positive on pending, and I will take that all day long, that is really good news. 2 weeks ago, we were positive on properties going under contract by 1.7 But we were positive on properties new on the market by 15%, which is why the ratio went down. 2 weeks ago, last year, the ratio was 0.88. 2 weeks ago, the ratio was 0.79. And that has been the case now for 4 weeks in a row. We've had the ratio last year outperform the ratio this year, which is why I am obsessed with this ratio. Because if we only focus on pending, we're going to say, oh, over the past 3 weeks, we've had an increase in pendings. That's good news. I'll take good news all day long. But when we look at the ratio, we say, wait, we outperformed the new listings. Well, now it shows that the ratio is actually underperforming last year's ratio. So what does that tell us about the market? That in relation to the new listings to pending, we're actually noticing a decrease. More inventory is entering the market this year compared to last year. So even though we've gotten slightly better on the weekly basis on properties going pending, and it's really just a very slight increase, it is being dwarfed by the number of new listings and back in the market entering, or that new listings and back in the market that are just now flooding the market. Let's go ahead and start updating the weekly. We're going to start by taking a look at open house. Lots of open houses. 3,734 open house opportunities over the past 7 days. That is going to be the highest number going all the way back to September 15th. So a 2-month high on open houses. I'm noticing a lot of open house signs out there. New listings, we are at 752. 752 new listings have entered the market. Keep in mind, this information will be updated up until 11:59 p.m. tonight. When I publish this new information tomorrow morning, you're going to wake up with the updated new listing to pending ratio. Check your email. For those early risers, you ought to be receiving an email with this information right around 5 a.m. For everyone else, when you wake up, you're going to do your gratitude list, your prayer, meditation, whatever it is that you do. You're going to look at the Austin real estate briefing. You're going to see my email with the updated new listing to pending ratio and the price increase, the price drop, the back of the market. All of that information will be locked in, and you will know exactly how many new listings we had over the past 7 days. Price increase. Interesting. Wow. 225. Highest number since September 15th, 225 price increases. I'd say builders. Wouldn't you agree? I'm noticing builders coming out there saying our prices are going up, which could very well be the case. But that could very well be interesting. That's a lot. That is a lot. Now, check out this email that I received from Dream Finders Homes, Builder of the Year 2025. Check out this email. Limited time, 1.99. You've got a 3-2-1 buy down where your year one is 1.99. Isn't that crazy? That is amazing. And then, of course, second year, 2.99, and then 3.99, and then 4.99 for the life of the loan. But an introductory rate of 1.99. Builders might be bumping up so that they can offer steep end of the year discounts. That is exactly what is happening, Jen. Very wise of you to point that out. That is very common for builders. They just, leading up to the last 2 to 3 weeks of December, they start bumping up the price, $5,000 here, maybe $10,000 there. And then they're like $20,000 off, but they've been artificially increasing the price, offering more incentives when it comes to loan buys downs. And then the price starts coming down. That's exactly what they're doing. You're absolutely right. Let's take a look at price decreases. We are at 1764, 1,764 price drops, 89%. That is a drop from the previous week at 90%. We hit a high at 95%, which was a 25-year high, by the way, 95%. We're back down to 89%. Price increases driven by builders. I forecast that this number is going to be in the mid 100s next week, and we're just going to have to keep on tracking this information. Let's go to back on the market. 165 back on the market. That's going to be a high percentage. 22% back on the market. So we reversed course from last week at 19% back to the 22%. And let's take a look at active under contract. Okay, not bad. 329. Would have wanted a little bit of a higher number, but that's not bad. I'll take it. This is where you get to guess. I need 5 guesses. I need 5 volunteers. If you don't volunteer, you get voluntold. I need 5 guesses on how many pendings did we have going back 7 days. Melanie Price is going to start us off at 242, followed by Harold at 195, Renee at 215, Seth at 233, Aaron at 294, Anai at 205. Looks like we have our 5 guesses. Let's go ahead and click on this. I have no idea what to expect. And we've got, okay, Bertina at 199. We have, you all, this isn't bad. I'm encouraged. 221. Not bad. Not bad. 221. We're starting off the day. So there we go. We've got an increase in the activity index, slight increase in the activity index. I believe it only comes out to about 4.3% when you look at the month over month, but it's good news. Slight increase in the activity index. We've got a slight increase on the number of price increases, mostly due to builders, but I'll take that. We've got, I would say, a better than expected. I was expecting this in the upper 100s. I would have guessed something closer to that 185 to 199. So that's not bad, 221. We are starting the week at a 0.60. Let's now take a look at the year-over-year comparison. New listings. Are we going to get 36 more new listings between now and 11:59 p.m. tonight? We have 13 hours and 47 minutes. Are we going to get 36 additional listings in the next 13 hours and 47 minutes? Absolutely. We're going to get about 60 new listings. So we're going to have another situation where this week we are going to outperform the same week last year. Price increase, we're already up 79. Price decrease, we're already up 256. Back on the market, we're down by 15. We're going to make up that difference. That's going to be positive. We're going to be positive on active under contract as we update this information. I do not think that we're going to be positive on the pending. I don't think we're going to be positive on the pending. We're down by 199 on pending. It's not going to be as bad as that 76 that we had 2 weeks ago. We're going to have a repeat of what we had 3 weeks ago. We're going to be single-digit percentage on new listings. It's not going to be 15%. It's going to be closer to that 7 to 9%. And we're going to have a single-digit increase on active under contract. So we're going to have a repeat of this. Mark my words. Maybe 7.5% increase on active listings, because if we end up positive by 20, that's 2.5. On the pending side, we are down 33.2, but we know what happens. Agents are really bad when it comes to updating information, especially builders. That's going to go up. I am going to go ahead and call it. I feel like we're looking at politics. It's like election day. I'm going to go ahead and call it. Only 2% of the votes were in, but I'm going to go ahead and call it. That we are going to be positive on both the new listings and slightly positive. I mean, really, really slightly positive. as we continue to update this information over the next 2-3 weeks, this number is going to turn into a single-digit percentage on the positive. What does that mean for the ratio? Are we going to beat 0.85 from last year? We're not. We're not going to beat 0.85 for last year. I would say we're going to get 0.8 would be my call. We're going to be 0.8. That's what I would say, which is not bad. It's not a bad ratio. Now, keep in mind that the ratio does improve as we go into the fourth quarter. December has really good ratios. We ought to be seeing a full 1 dot plus ratio come December because the number of new listings entering the market plummets. Sellers do a lot of price drops entering the fourth quarter into the fourth quarter, and then buyers take advantage of that. So we do see a drop in inventory, an increase in activity. 23 out of the past 25 Decembers outperformed November. So I'm very bullish for December of this year, especially with the deals that we're seeing out there. Very aggressive price drops, sellers wanting to move that product. And then we've got the buy downs that the builders are offering. We've got this slight decrease in rates that we experienced over the past few months. Unfortunately, we did lose some of that over the past 2 weeks. Best case scenario, the government reopens. We have positive information regarding inflation. That's supposed to come out on Thursday. And then that has a positive effect on rates. That's the best case scenario. Worst case scenario, we don't have positive information on inflation. And then we take another beating on rates, and that does not set up a good foundation for December. That's why we track this information on a weekly basis. I update this on a daily basis. I am obsessed with this information, as you can tell. Let's go ahead and start updating the monthly. So far this month, we are at 845 new listings. Price increase, we're at 250. Price drops so far this month, we're at 1960, 89%. Best reading going all the way back to March. Not as good as November 2024 at 88%. That ratio tends to go down into the fourth quarter. We get down January 82%, and then it really starts to pick back up. This shows that early selling cycle that we have. By the time we hit April, May, June, that's when the price drops start escalating because sellers realize that they missed the market. That's why we see a huge jump on the number of price decreases come April, May, June. Austin has a very short selling season. Let's go into back on the market. We are looking at 179 back on the market, 21%. The average so far the entire year is 19%, so slightly over. Active under contract, 416. And let's take a look at pending. We're looking at 271. 0.67. Not the greatest new listing to pending ratio. We are only 10 days into the month. This is going to go up. But November of last year, 0.94. No way we're going to beat November of last year. We're going to be into the 0.8s. Mid 0.8. So we're not going to outperform November of last year at a very healthy 0.94. December of last year, we saw 1.03. We had 74 more properties go under contract than new properties entering the market. That was the only negative figure that we've had going all the way back to what? December of 2023. When that was negative 207. You see how Decembers are really positive? Positive meaning more properties going under contract than new listings plus back on the market. December 2022, there's that negative 80. December 2021, negative 813. Best ratio ever was January 2022 at a 1.32 at a negative 1,055. That's when it set us up for the lowest inventory ever at 2,584. Right now, we're at 13,486. Let's take a look at sold so far this month. 362 sold. Let's take a look at withdrawn. 321 withdrawn already, and this is only 10 days into the month. Expired, 138 expired. So there we have the monthly information. Let me go ahead and just save this. Keep in mind, this will be updated. You will receive an email with an update here shortly, a few hours after we finish this meeting. You're going to get a PDF with the updated new listing to pending ratio that you can use for your buyer presentations, listing presentation, knowing the market, learning the market. Let us go over the daily briefing. Oh, let me go ahead. This is from last week. So let me go ahead and just open up the new one. Let's go ahead and open up the new one here. We don't want last week's. We want fresh information. Monday, November 10th. Hard to believe today is November 10th. Really amazing. We have 15,756 active listings currently on the market. Let's do the breakdown on active listings. Out of everything that's currently in the market, 26.9% are new construction, 73.1% are resale. The activity index for resale, 16.53. For new construction, 25.79. We're up a little bit on short sale. We're back at the 80 mark for short sale. When you look at the number of new listings, let's focus on activity index right now. Very interesting what's happening with activity index. It's just flatlining. Flat. When you look at last year, we hit a low in August. Activity index improved all the way to February. Between November and December, or even October, going back all the way to July, from the end of July all the way to the end of February, the activity index kept improving. Look what's happening this year. It is just flat. Why do you think that is, you all? That is very different than last year. Activity index is just hitting that. It just cannot get past that 20%. It just creates a stalled market situation. Very different than last year. We just cannot get over that 20% activity index. Now, I was very excited to pull the data this morning and to see that October outperformed September on the activity index, but it's still not over that 20%. And when you look at the activity index and you break it down per zip code, and here's the chart that I was talking about, but let's take a look at the zip code breakdown. Now, one city is on expansion. We've got one city that is within the equilibrium, and that's going to be Driftwood at exactly 25% activity index. That's a balanced market condition, steady absorption, translates into that 4.5 months of inventory. We've got 3 cities are softening, and that's between 20 and 25%. Cedar Park, softening market conditions. Pflugerville, Manchac, all softening conditions. And then we've got 15, half of the market in Central Texas is within the contraction zone, 15 to 20% activity index. And then 11, paralysis mode. That is where you're going to have under 15% activity index. That's going to be 35% of the market. On the zip code side of things, very similar percentage. You've got 39 out of the 75 zip codes that we are tracking. 52% are within the market stall, supply imbalance, price decline. And that starts with Hutto at 19.34%. And this is going to be all properties. You know, this is actually, no, this is resale. This is resale. I'm going to go ahead and just change. This is only resale. When you look at all properties, Hutto is at 24.36%. When you look at only resale properties, Hutto is now within that contraction danger zone under 20% activity index. Let's go back and keep on looking at the daily briefing here. 58.3% of all active listings have had at least one price drop. 58.3%. We got up to 60% a few months ago. 58.3, still pretty high. The active listings, we are up 14.1% year over year. Cumulative new listings on the market, record high, 46,066 new listings on the market. Pending listings, good news, better than expected and better than the reading on Friday. On Friday, we were down over 4%. Right now, we're down 3.5% on pending. Year over year, we are outperforming 2023 on pending properties. We have right now 3,821 pending properties. Last year, 3,960. Cumulative pending, 38,723. And you see that inventory increasing. Active listings or new listings, 46,000. Pending listings, 38,000. Where does the difference go? Active listings. New listings way higher, pending listings lower. The difference equals more inventory, and that's exactly what we are noticing. We went over this information. This is the activity index on the resale side of things, so we already went over this information. The monthly new listing to pending ratio currently at a 0.63. We can see that last year, 0.94. I do not foresee us beating that 0.94. It's going to be under that 0.94. Best case scenario, we're going to beat 2023. That was a 0.82. It's going to be between that 0.82, hopefully 0.85. The difference between new listings and pending, 7,343. The new listing to pending ratio so far for the entire year at a 0.72. That's going to be the difference. We have 15,399 more properties enter the market, new on the market, than went under contract. Really just an astounding figure. That's going to be the highest since 2010 at 16,938. Let's take a look at months of inventory really quick. We are at 5.6 months of inventory. That is starting to flatline a little bit. Whereas last year it kept on going down, we're noticing a little bit of a flatline on months of inventory, just really holding steady at that 5.6. When you do the breakdown on months of inventory, all properties, new construction, and resale, we have 16 zip codes still in a seller accelerated market, 14 out of the 75, 19%, tight supply, upward pressure, 39% balanced condition, neutral zone, stable market. And then we've got a combination of 22% under, or really over 7 months of inventory, 22% over 7 months of inventory, starting with 2-1 at 7.10, 05 at 7.2, going all the way up to downtown Austin, 78701, the Central Business District at 14.8 months of inventory over 1 year. We've got Smithville at 15, Spicewood at 17, and Dale at 2 years worth of inventory. Really, really amazing. Year over year, City of Austin is up 5.8%. Year to date, City of Austin is up 17.6%. Year over year, we have Cedar Creek is down, Taylor's down, Burnett's down, Dripping Springs, Wimberley, Driftwood, Lago Vista, Manchac, the surrounding areas, and then Manchac right there in the middle. When you look at inventory increase year over year, look at Hutto, 89.5%. Got 89.5% more months of inventory in Hutto November of 2025 compared to November of 2024. We are forecasting a little bit under 2,300 properties selling, 2,280 property sales for the month of November. That's going to bring us down on all the cumulative sold properties, roughly 3.3% year over year. When you adjust this for population, here's the good news. Not the worst year on record. That's a really good news. We are absolutely outperforming 2010, 2011 on the sold properties per 100,000. The good news for us is because agents continue to leave the business, we're actually outperforming 2024 and 2023. That's the good news. 1,509 cumulative sold properties from January through November. I read a fascinating stat out there that 50%, and I'm going to pull the data. I'm going to wait until the last week of December, or maybe I'd say, you know what? I'm going to wait until the last week of January of next year to pull the data. I'm going to dump every single property that closed, because the rumor that I'm hearing out there, and there's nothing that would invalidate that, is that 50% of all Austin agents have not closed one transaction in the past year. 50% of all licensed agents have not closed a single transaction, lease, sale, nothing, zero production in the entire year. I'm going to pull the data and validate that because I am convinced that the number is higher, that it's upwards of 50%. I'm convinced that it's going to be closer to 60%. So absolutely convinced of that, because when you look at this, you've got 1,509 properties sold per 1,000 realtors, not in a month, in 11 months. That's like one sale. That's 1.5 sales per realtor in the past 11 months. So when we pull the data in January, because I want to capture the entire year, I'm convinced it's going to be over 50%. Absolutely convinced. So that means that our competition is actually a smaller pool that's being reported. Absolutely. Well, I would say your competition is down to a pool of one. And guess who that one person is?
My competition is only who I was yesterday.
I love that, man. I'm gonna engrave that. That's exactly it. You are your only competition. I love that. Thank you for sharing that, Bertina. I'm gonna write that down. As a matter of fact, do you mind emailing me that, texting me that? That's gonna be. I'm gonna write that down. My competition is who I was yesterday. I love that. That's fantastic. That's wisdom right there. You're absolutely right. You are absolutely right. Now, here's where it gets interesting. Not quite sure how to discern this data, because this is really fascinating. Prices are skyrocketing. Let that sink in. October, 8.5%. As a matter of fact, let me bring up market cycle. We're really going to focus on market cycle right now, because this is fascinating. Can you believe that we had the best October on record for month-over-month price increase? Historically, Octobers are decent. 15 out of the past 26 Octobers, price went up month over month. We did have a tough period from 2021 to 2023 where October was bad. It went down. It peaked in 2023 with a 3.7% month over month drop, the second highest drop on record. We have to go all the way back to 2007. And then, thankfully, in 2024, we had a positive October. This is month over month. And now we've got an 8.5% increase month over month. That is not only the best October on record, the second best October on record, was an increase of 5.3%. And that's when the market was in full swing, full rebound. A 5% increase in 2010 was a market on rebound. A 4.8% month over month in 2003 was a market on rebound. Is this a bull trap? Is this what is it? Is this inflation? Is this the bifurcated market? I just had an agent give me a call, which you would be amazed on how often this happens when agents call me during the meeting. So what I like to do is I like to take a picture of me on this call and just send it back. I just like to take a picture and send it back. Really interesting. It could very well be a combination of all of those items. The data clearly shows us that we have a bifurcated market going on right now where the upper 25th percentile is outperforming the bottom 25th percentile. And I can show you the data right here. These numbers are staggering. The top 25th percentile is up 6.4% year over year. Just insanity. On the price per foot, it's up 3.2%. Really, really amazing. Only 10 out of the 30 cities went down where the top 25th percentile underperformed the bottom 25th percentile. So 2/3 of the market, the upper, we got a comment right there. Hey, the rich get richer. Yeah, absolutely. Equity market's doing very well. If you won't in an inflationary environment, that is common. Where anytime you have an inflationary environment, the asset holders their assets go up immensely in value. And then if you are not an asset holder, then you are struggling. And that's exactly what is happening. Now, let's go back to the market cycle because, Aaron, you bring up a really, really good point, and take a look at that 6.5%. We had September was the worst September. So that's why it's so hard right now. It's just all over the place. We just had the worst September on record, month over month. And it's like, okay, we're about to experience some pain here. And then it's like, we just had the best October on record. It just feels like market whiplash. That is what's going on. Now, keep in mind, this is at the macro level. That is why we have to be obsessed with what? Real estate is always going to be hyper-local. You have to be obsessed with your city, your zip code, your neighborhood, your street, your property. That is what matters because some areas are performing very well. Other areas are just getting destroyed. So you've got to be very, very cautious about that. This is at the macro level. And here's the other thing. When you've got a drop on the number of sold properties, and let's just call it like it is, we just reviewed the data. We've got 25-year lows, not the lowest one on record, the third lowest on record. But we've got a drop on the number of sold properties. So what is selling is going to move the market a lot more. When you have the upper 25th percentile performing fairly well, very well, it's going to move that needle, that median, that average a lot more compared to 4,000 properties selling in a month. When you've got 2,200 properties selling as opposed to 3,800 properties selling, what is selling is going to move the needle way more than when you've got 4,000 properties that are selling. Where this is really challenging is where I know that we're having conversations with certain listings. And by the way, we also have listings getting multiple offers. Everything is hyper-local. But I know that you're having certain conversations with certain listings where you're saying, hey, by the way, this is really tough. We needed a price drop. But then what do? You publish your weekly stats, and all of a sudden your weekly stats show up as what? Hey, client, welcome to my weekly stats. Everything is up. So what do you have to do? Well, you have to explain the context. That's why we go over this information on Mondays, on Wednesdays, on Fridays. Hey, this is the macro level. This is the entire snapshot of the market. We're talking about your city, your zip code, your neighborhood, your street, your property. What do you believe will happen when the top tier of the market starts to tank? Oh, prices will It'll just drive everything down. And we had some seasons where that happened, and it just causes the median and the average price just to go down quick. That is when you see that 6.5% drop, that 4% drop, 3.7, 2.6, 5.6. That's when you see that. The entire median and the entire average just goes down really fast. Very, very fast. Year over year, 6.2% gain year over year in October. So far this month, a 10.2% gain year over year. Primarily driven by the top 25th percentile of the market, but not exclusively the top 25% of the market. There are some areas, when you look at that percentile analysis resource that we created, there are some areas that are outperforming all percentiles. Everything is going up. You've got to be obsessed with that. Take a look at that percentile analysis. Really rely on that information. 5.8% increase month over month on median October. And so far, a 2.7% increase so far this month. Month over month, November, year over year, 4.5%. Now, keep in mind, this is also a lagging indicator. That's what this is, lagging indicator. What's the leading indicator? The new listen to pending ratio, the activity index. So I would say that this is going to be driven by a combination of two factors. One of them is that we are noticing new construction outperforming resale. It's been the case. They are holding on to their price, even doing price increases, and then they're pushing very aggressive rate drops. That's keeping the price artificially high. That's what's happening. And then we also have the bifurcated nature of the market, where the top 25th percentile continues to outperform the bottom 25th. And then there are some inflationary concerns right now. That is real. We are noticing that affecting new construction. We're just going to have to keep really, really good track of this information, but be obsessed with your zip code. When you look at the median price and you compare everything that's sold this year, the median price this year compared to last year, we are looking at 8 cities have actually gone up in price. 21 cities have gone down in price. And if we were to score or look at the absorption ratio, we are underperforming last month. That's going to be the sold divided by active. We're currently at 16.48, last year at 20.5. So we did have a decrease on the number of sold properties for the month of October. That is why the absorption ratio is underperforming. The good news is that it is better than July, which it hit a year-to-date low of 16.4. So we were up slightly to 16.5, but we are trailing October 2024 big time. I do not update the monthly information on this resource until the last 5 days of the month, or else the information is going to look really bad. It's going to be super low because we haven't had a lot of properties close. It's only the 10th of the month. And if we rate the market from a 0 to 10, 0 meaning the market is trash, 10 meaning the market is absolutely amazing, we are at a 4.66. So we're slightly under that halfway mark on that just, average stale market. We're slightly under that. We're at 4.66 for the month of October. And that's going to be better than July, better than April, better than January and February, but not nearly as good as October of 2024. This is also going to be that leading market indicator. And this is going to be that, what is the market like from 0 to 10? What is it that we're looking at? Let's take a look at a few more things. As a matter of fact, I'm going to go ahead and pull up the percentile analysis so that we can look at that new favorite resource that we published, the one that is also available on the affordability for every single zip code. And let's take a look at the markets where everything, I know this is really small font, so hang in with me. When you look at all price points, the entire 6-county area, we're up 3.4%. That's where we take the last 30 days worth of sold. We compare it exactly the same period last year. We're up 3.4%. Not bad. City of Austin up 1.1. Bastrop up 0.9. Buda. Take a look at Buda. Down 9.5. And Buda really struggling from the 5th percentile all the way to the 55th percentile. So when you take the median price is going to be the 50th percentile. 55th percentile under 11%. Only the 95th percentile or 90th percentile is up 1.3. The 95th percentile is going to be up 44.4% year over year. Limited number of properties. Those are usually properties that come with acreage. Lot of pricing volatility. Don't trust this number. Don't say that the most expensive homes in Buda are selling for 44.4%. That is an accurate figure, but a misrepresentation of the market, because it could be 3 properties. 3 properties sold last year. 4 properties sold this year. Heck, it could be 2 properties sold this year, but the one property that sold was a 25-acre property, and that's going to drive that entire price up. So be very cautious with that 95th percentile. I am more focused on the 75th, 80th percentile. That's going to be a better representation of what's happening with the market. But you take a look at Cedar Park. Cedar Park down across the board. Not only is it down by 6.1%, which is really significant, but every single percentile in Cedar Park is going to be down. When you look at the 75th percentile in Cedar Park, and what is that? That's going to be your Crystal Falls area. That's going to be your $1 million property, 1.2 into 1.3. It's all down. It's all down. And what was Cedar Park like just even a few months ago? It was up. So here we have a situation where in a very short period of time, a lot of pricing pressure in Cedar Park. Why is that? Is that one of the concentrations where people, unfortunately, and I'll just say this, we've got an active short sale currently in the market in Cedar Park. We're negotiating 3 additional short sales in Cedar Park, and they're all at that 75th percentile price point. And they were all purchased from 2021 to that 2023. So imagine when that property is entered as sold in Cedar Park, and it's down, 25, 30, that now becomes a comparable for future listings. So something to be really cautious about. You're going to a listing presentation in Cedar Park, you're at that upper 70th percentile. You've got to be obsessed with the data. Now, you go to Dripping Springs, it's the complete opposite. The over 55th percentile doing extremely well, outperforming everything, so really, really doing well. Bertina said it's no longer a 90-day market. It looks like a 30-day look. So this resource right here just takes the last 30 days and then compares it to the last 30 days a year ago. When you look at months of inventory, we do use the average monthly sold going back 90 days. So for this specific resource, it's just that 30-day snapshot. Very, very good question or very good statement. Let's take a look really quick, you all, at the economic calendar, see what we have in store this week. Let's go ahead and click on this week. We did have 2 bond auctions, both of them better than better than previous, which is really good. 3-month came in at 3.780. That's great. 6-month, 3.69. That's also good. We've got a 3-year auction at noon today. We have National Federation of Independent Business, Small Business Optimism. That's going to come out. They're expecting it to be lower than previous. I'm going to be a little bit on the pessimistic side of that. I actually think it's going to come in lower than 98.3, personally, just based on what I'm reading out there, small businesses, what's going on. I think that that's a little bit too bullish. I hope I'm wrong. I hope I am wrong. I hope it comes in over 100, high optimism for small business. I hope it comes out over 100, meaning expansion. Under 100, a contraction. Over 100 expansion. So this is one of those where I hope I'm wrong, which oftentimes I hope I'm wrong, but I really do believe, just based on what I'm reading out there, what I'm personally seeing, that it's going to come in a little bit lower than the 98.3 into like the 97-ish or so, upper 97. Then going into Wednesday, we've got the weekly mortgage application reading. We've got a lot of Fed members are going to be speaking. I really do like it when the Fed Waller speaks. He tends to shoot it straight, so I do pay attention to him. I don't read any. Also Williams. I like Williams. So when these two speak, I pay attention. Unless it's Jerome, the head of the Fed, or Williams and Waller speaks, that's when I pay attention. Everyone else, I just don't have time for that. We've got a super important 10-year auction happening on Wednesday. The big one is going to be, is the government going to be open? Is the government going to be open for the Thursday CPI reading? And are they going to be able to publish that information? So, did they vote already? Is it officially open? I don't think they voted. Right? Okay, Senate vote to end. When did that happen?
Strong.
Okay.
Stable,
Nah, it doesn't.
consistent.
Let me just. It doesn't look like they voted quite yet. Doesn't look like they voted to open it yet. I really do hope that they actually open the government by tomorrow. Okay, so even if the Senate votes, House does too. Okay, oh yeah, because they're actually changing a few things. They're not voting on the quote-unquote clean CR, so they're modifying a few things, so it goes back to the House. I'm glad you brought that up, Violet. So my confidence of them voting on anything went from like a 90% down to like a negative 90%. So let's just expect not to have this data. I do have a flight to Chicago on Thursday morning at 5:55 a.m. It's the first flight out to Chicago Thursday morning. I just hope it doesn't get canceled. I just hope it does not get canceled. A buddy of mine went to the airport. It was 3 hours to get through TSA. 3 hours to get through TSA. In the middle of the day flight, and it was miserable. Almost missed the flight. Just dreadful. Awful. But hopefully we have CPI data. I don't feel bullish about us getting CPI data, so it's just going to be delayed again. And this is what's going to happen, you all. Whenever the government does open, we're going to have a month and a half worth of data dump that the market is going to have to process. Very erratic right now. Even though rates trended upwards a little bit over the past 2 weeks, I am still in a lock and float mindset because we don't know how this data is going to come out. It could come out great. We could have low inflation, and which is still like low inflation is like I only stole, a little bit from you. Like it drives me crazy when they're like, we've got low inflation. It's like full. That means that you're just stealing a little bit less from me. I don't want low inflation. I want deflation. I want prices to go down. I don't want prices to go up by just a little bit. I want prices to go down. That's what I want. And y'all hear that nonsense about the 50-year mortgage? Y'all, for a lot of stuff that they say, doesn't matter who's in office. Y'all have known me some of you for decades. For the most part, I'm like, okay, whatever. Y'all, this one is like, no, absolutely not. Like, I do not want 50-year mortgages that are backed by the federal government. Absolutely not. That is just the stupidest thing that I've ever heard in my life. If anything, and this is where I'm bound to upset at least 2 or 3 of you, hopefully more. You thought that I was going to be like, I don't want to upset you now. Hopefully I'm upset more than 2 or 3 of you. Y'all, I wish that the government wasn't involved in like 99% of mortgages to begin with. Right? Just look at everything the government gets involved in gets more expensive. They don't ever fix affordability. Ever, ever. Why is LASIK surgery so less expensive? Well, it's because the government's not involved. Why are TVs cheaper? Why can you buy an 80-inch TV at Costco for $559? If the government announced tomorrow that they're going to make TVs more affordable, that TV would be $5,000. So anytime these fools say that they're going to make something more affordable, the daggone price goes up by 100% within the next few years. So when they're like, yeah, we're going to do 50-year mortgage because it's better to buy a house at a 15-year mortgage than rent a house for 50 years. Yeah, the banks are salivating because they make 3 times more interest over the next 50 years. It's just insane, insane. All right, there you go. I'm done. Thank you for allowing me to speak my piece. I'm done. So, man, I love coffee. Oh, man, I love coffee. It keeps me grounded. Not upsetting me. The government is too involved and too much, and they just mess things up. Amen to that, Bertina. Amen to that. Y'all, it is 10:56 in the morning. I do want to remind you that we do have our Wednesday training. Please be sure to join us for our Wednesday training. We're going to be doing our contract review. If you did not get a chance to start your contract review, please take a moment and go to resources.teamprice.com, go to learning, go to contract proficiency, and take a look at this. This is going to be a 0 down VA loan. Pay very close attention to this property. I hand selected this property on purpose. Pay very close attention and make it a goal to do your contract proficiency. Today is the 10th. You ought to read paragraph 10, which is what? Possessions. All right. Did everyone here read paragraph 10 this morning of the contract? No, possession section of the contract. It's really small, just a few sentences. It'll take you 30 seconds. So this is my challenge to you. Take a look at, when you go to resources.teamprice.com, kickstart your day. What do? You start with a little bit of gratitude. I'm so grateful for you all. You study the market. You read the contract, 1 paragraph per day. Today is the 10th. Read paragraph 10. You will know more about the contract than 99.99% of the 17,000 agents currently licensed under ABOR. If you just take the 30 seconds today and get that contract, read paragraph 10. That's going to be possessions. You're going to learn something about the contract. Do that every single day. And then, of course, create your daily plan and stay connected. Do not isolate yourself. The number one reason people leave the business is because they do not stay connected. They start isolating themselves, and start immediately. And then, of course, a part of that, do your contract proficiency. Is that a hint regarding contract proficiency? Absolutely. Make sure to do the contract proficiency, you all. Super, super important. Very, very important, so that you can satisfy what? One of our 3 non-negotiables: market data authority, contract proficiency, and then, of course, relationship stewardship. Any questions, comments, concerns, criticisms, or complaints? Any questions, comments, concerns, criticisms, or complaints? Going once. Going twice. Sold. All right, you all. Thank y'all so very much for joining. Super appreciate it. I hope you have an absolutely amazing, excellent rest of your day. If you do need anything, please feel free to always reach out, and I will chat with you all later.